Why I will never buy an apartment. Stocks versus concrete. Intro. We have all heard it since childhood. Owning your own home is the best investment, but I have reached a different conclusion. Buying real estate as an investment is one of the weakest strategies out there. Today I will show you the numbers that prove stocks dramatically outperform property. Stocks versus concrete. A stock is a share in a living, growing business, profit, innovation, dividends. Real estate, it's concrete and land. Its value depends on local demand and inflation, nothing more. The 5 superpowers of stocks. Speed. You can sell stocks in a minute. Real estate takes months, sometimes years. Growth. From 1928 to 2024, the S&P has returned about 10% per year, including dividends. Over the same period, residential real estate, including rent, averaged around 5% per year. In the last 30 years, the S&P grew roughly 10x, while US home prices rose only 4x. Since 1992, the S&P averaged 10% annually, while housing returned about 5%. Autopilot. ETFs and index funds run on autopilot. No tenants, no repairs, no lawyers. A property demands constant attention. Diversification. With just $100, you can own shares in thousands of companies across dozens of countries. With real estate, it's one building, one neighborhood, one crisis, and everything can collapse. Minimal costs. Stock investing, tiny brokerage fees. Real estate, taxes, insurance, maintenance, agents, lawyers, all eaten away at your return. The illusions of concrete. Frozen capital. When markets crash, your money stays locked in walls. You can't rebalance fast. Pay to own. Even when the apartment sits empty, you still pay taxes, insurance, and utilities. Your asset keeps generating expenses. Local risk. Neighborhood declines, prices drop fast. Population falls, demand fades. Even when the national economy grows. And local shocks, wars, recessions, regulation hit property hard. Why I choose renting and stocks with real numbers? Let's run a simple scenario. We have $100,000 and 20 years to invest. You can either buy property and rent it out or invest in S&P ETF with dividends reinvested. So, scenario 20 years. Stocks at 10% annual return will grow up to $650,000, and on the other hand, real estate at 5% annual return will grow up to $230,000. That's nearly 3x higher growth from stocks before even counting property costs or taxes. Conclusion. Stocks mean growth, global research, liquidity, automation, and minimal overhead. Real estate means limited growth, local risks, and hidden expenses. If you're buying a home to live in, it's great, but if you go to grow wealth, real estate is not the best vehicle. So what's your strategy? Are you still team concrete, or are you joining the pragmatic world of stocks? Drop the comments below.